Real estate has always been considered a valuable investment asset, and it's an excellent way to grow your wealth over time. But for those of you who have no clue on how to get started, there's nothing scarier than an unknown path, especially if we're talking about the realm of real estate. However, what if I were to share some insider secrets for you? Well, good news! I'm here to tell you the 9 fastest ways to build wealth investing in real estate. In fact, if you stay until the end of the video, not only do I want to tell you the secrets of how to crawl your way up to real estate fast, but I will also give you tips that helped Grant Cardone and other successful real estate investors reach financial freedom. So if you're ready to know how, here are the 9 fastest ways to build wealth investing in real estate. Number 9, forced appreciation. Forced appreciation is different from simply waiting for market conditions to improve or for inflation to kick in. It requires effort, but the payoff can be significant. If you put your money into upgrades and renovations, you're effectively creating value that wasn't there before. Of course, this strategy does require some upfront investment. You'll need to be willing to spend money on improvements in order to see a return. But as the saying goes, money is always made with money. Take note. If you're willing to invest in your property, you stand a good chance of seeing a profit in a relatively short amount of time. If you're someone who is bold and looking to build wealth through real estate, forced appreciation is definitely worth considering. It's a way to take control of your investment and increase your chances of success. And if you really want success, you should tune in until the end of the video because there's still a lot of things you need to learn. Of course, before doing so, please like and subscribe to the channel so that you're always updated with our latest uploads on topics like this. Number 8, no inflation. Inflation is a term that gets thrown around a lot in the world of finance, but what does it actually mean for you and your money? Simply put, inflation causes prices to go up over time, meaning that the dollar you have today may not be worth as much in the future. This can affect everything from the cost of your groceries to the value of your investments. Now, one thing to keep in mind is that not all assets are created equal when it comes to inflation. Cash and bonds, for example, are actually negatively impacted by inflation, and they lose value over time. This means that they may not be the best choice for long-term savings. However, there is one asset that is almost guaranteed to increase in value along with inflation: real estate. Because believe me, people will always need a place to live or do business no matter what the situation is. As long as real estate prices stay aligned with wages and expenses, your investment should increase in value at a rate of about 2% per year. And isn't that great? I know it is. Number 7, help yourself with REITs. REITs are indirectly real estate investments that allow both beginners and experienced traders to gain exposure to the market without having to buy their own property. Think of them as baskets of different assets that are traded on the stock market, just like ETFs and mutual funds. REITs can be a good option if you don't have a lot of money to invest and want to get started in real estate. One benefit of REITs is that they pay regular dividends, giving investors a steady stream of income. Purchasing shares of a REIT can earn you a proportionate share of the income they produce. Just so you know, there are different types of REITs and they invest in different assets. For example, equity REITs own buildings, while mortgage REITs own mortgages and mortgage-backed securities, or MBS. I highly recommend you to do your research and understand what type of REIT if you're interested in this kind of investment. Number 6, enjoy tax breaks. In real estate, not only do you get to earn passive income, but you also get to enjoy tax deductions for various expenses related to your investment. Some of the costs that you can deduct include property tax, repairs, maintenance, and depreciation. By deducting these expenses, you'll be able to reduce your taxable income and pay less tax. It's like getting free money at the end of the year. How would you like that? Now, to make the most of these tax breaks, keep accurate records of all your expenses. This will help you claim the maximum deductions and avoid any issues with the IRS. If you're not sure about what expenses are deductible, consult with a tax professional who can guide you through the process. Speaking of professional, let's now go to number 5, ask help from a tax advisor. If there's one thing you can't afford to overlook, it's your taxes. Working with a tax advisor can help you take advantage of the many tax benefits available to real estate investors, allowing you to offset your income and maximize your wealth. Some of the benefits available to you as a real estate investor include deductions for interest, depreciation, repairs, and local travel. As a landlord, you may also be able to deduct costs for legal and professional services related to property management or maintenance, as well as losses due to theft or casualty, and insurance premiums related to your rental property. If you're not working with a tax advisor, you are absolutely missing out on these benefits. A tax advisor can help ensure that you're taking full advantage of all the tax leverages available to you. While there may be a cost involved in working with a tax advisor, it's well worth it in the long run. Number 4, invest in education. Knowledge is power, that's what they say, and I believe it holds true. Because if you don't know what you're doing, you could be setting yourself up for failure. Lucky for you, there are plenty of resources out there to help you educate yourself about real estate. You don't need to sink all your finances into an expensive education. Instead, consider taking affordable online courses that can give you the basics you need to get started. But acquiring knowledge is only the first step. To truly succeed in real estate, you need to take the plunge. Don't be afraid to put your newfound knowledge to the test and make your first investment. Number 3, put your money on emerging needs. The pandemic has caused significant shifts in property types, creating both challenges and opportunities for investors. But these properties have seen an increase in demand: warehousing, supply chain management, and logistics. To give you an idea, while brick-and-mortar stores have suffered due to the pandemic, emerging societal needs have driven real estate opportunities for investors. Say, for example, the COVID-19 vaccine has created a need for cold storage, which presents an opportunity for investors to capitalize on. As we move forward, I need you to keep an eye on how the acceleration of business models is impacting real estate and how these changes can benefit clients. Real estate investors should be aware of the way in which emerging opportunities are shaping the industry. Stay informed about new trends and developments that can present investment opportunities. Number 2, invest in a private debt fund. Private debt funds are a compelling investment opportunity that offers a different level of exposure than traditional equity investments. They allow investors to pool their capital and lend it to companies that require funding for real estate projects. In exchange, investors receive an equity position in the company formed to lend money. This strategy is particularly attractive to investors looking to diversify their income sources or replace an existing investment with a higher yield. Compared to equity funds, private debt funds offer several advantages, especially for those with a shorter time horizon and lower risk tolerance. These funds offer a stable and predictable return, making them an excellent choice for those seeking a regular stream of income. And for the icing on top, private debt funds typically have shorter lockup periods, meaning investors can access their capital sooner. Number 1, always have exit plans. Having a backup plan is great, but having a solid exit strategy is even better. In fact, it's highly recommended that each of your investments have at least 5 exit strategies. The market is constantly changing, and what might have been a great investment yesterday might not be tomorrow. So how do you make an exit plan? Stay ahead of the game and be prepared for any scenario. The last thing you want is to be stuck with a property that you can't sell, especially when the market turns sour. If you have multiple exit strategies in place, you can easily let go of an investment if you need to. Whether it's through a traditional sale, a lease option, a short sale, or even a joint venture, having options is key. Here's my 2 cents. It's not just about making money in the real estate market, it's also about protecting your investments. Investing in real estate is an excellent way to build wealth, and there are several strategies that you can use to make the most of your investment. But if you're looking to build wealth quickly, try the strategies I have mentioned. They are already proven and they work most of the time. However, this does not mean you should take my word for it. You should also do your own research so that you know what you're getting into. The only question now is, what do you believe is the fastest way to build wealth in real estate? Leave your thoughts down below. Also, don't forget to like and subscribe to the channel for more real estate content like this. In fact, if you want to know the easiest way to make money in real estate, watch this video where we'll give you the full scoop. So click the video on the screen now and we'll see you in the next one.